What's going on, everyone? I hope you're having a good day. And today I'm going to be going over my trade journal for April 30th, 2024. And I'm telling you, I literally predicted the market like a book. I was literally one with the market. I was the one making the market, matter of fact. So, anyways, let's get right into it. I'm going to be keeping this simple and short, so let's get right into it. So, firstly, I'm just going to put up a screenshot of what my daily bias was and why it was that, and if it was actually correct or not. And I'm telling you, it was super right on the dot correct. So, just take a second to read this, pause the screen. All right, now that you've read that, basically that's why it was my daily bias. I don't want to waste time going through it, but I'll just go really quickly. I'm not gonna get into all of it because if you have been watching some of my videos, you'll understand what I even said in that. Um, I will touch on the things that I didn't mention in my videos yet and the lessons that are yet to come. So basically, on the daily time frame, we are in equilibrium already, right? We've touched equilibrium. What's above equilibrium? There's this daily high that I thought we would reach up to. Um, but then what I was conflicted with was that on the 4 hour and the 1 hour, price wasn't trying to chase that. Look, it was consolidating, right? Usually when price wants to go chase some sort of liquidity, it jumps up like this. You see these big momentum like moves. That's what it does. Right here, boom, we wanted to jump up quickly to take out this high right here, right? And that's exactly what we did. But right here, when we start consolidating a little bit, that shows a little bit of weakness to me. That we don't want to take out that high, so that's showing weakness. And on top of that, on ES, if we do the same exact thing on the daily time frame, I'm sorry, ES is a little bit messy because I'm not trying to delete this because I need to use this in my confluences. But on the daily time frame, as you can see, equilibrium has been already hit. And what is this right here? This bearish candle makes a fair value gap, right? Bearish fair value gap from this candle's low to this third candle's high. There's a bearish fair value gap, and the top of the bearish fair value gap, which is right here, is going to act as resistance. And what's also right next to the top of the bearish fair value gap? Equilibrium right here, right? So that's going to act as resistance, right? That's acting as heavy resistance. And on top of that, I'm just going to go over it real quick. I do not want to make this daily bias this long because I already mentioned it. I already showed you the screenshot, but there was SMTs at these highs right here. SMT is basically when one of the pairs liquidity gets swept and the other doesn't. So on ES, liquidity right here did not get swept, right? This high didn't get taken by this. But on NQ, I'll mark it out real quick if I can find it. Okay, I see it. On NQ, this high right here got swept right here. It's just a tiny bit, but it still counts as a sweep, right? It went over the high. That's called SMT divergence, and it's very, very crucial for reversals. Now that you know why I was bearish, I'm going to get into my entry and my exit and what my draw on liquidity was. So first of all, at 8:30 we had news, and I love that because what is this doing? This is literally manipulation. This is manipulation to the max. It's manipulating all the retail traders out of the market. Right here, when this move happens, the retail traders are like, "Oh shoot, we just broke through this swing low right here, or like this low right here. We're gonna go short, short." They're spamming the short button, right, without any other confluence. They're just saying, "Oh, this was support before because price bounced off of it. The support got broken, so now they're like, okay, now we're gonna go down." And that clearly does not happen because we, using smart money concepts, we know that's just a manipulation trick. So while they're getting shorts, where are they going to put their stop loss? Their stop loss is going to be right here at this high, right? Because they're like, okay, we're going to go short. There's no way it's going to go to that high. And if it does, I'm wrong. Guess what ends up happening? This 15-minute liquidity right here gets swept like that. And I'm going to just mark it out. This right here was my initial target for it to get swept, and that's exactly what happened. And there was also other confluences, like these 15-minute relative equal highs right here. I'm considering these relative equal because this high and this high is basically the same thing. And then we had 8:30 open right here. So price went, this 15-minute liquidity was above the 8:30 mark open. Well, let me mark it up real quick. I'll make a video on why that's important, but basically just know that it has to do something with the power of three if you didn't know already. I'll make a video on it very, very soon on why that's important. But basically, if you're bearish, you want price to be above 8:30 open. Or midnight open, which is right here. I'll mark it out real quick. Midnight open was right here. So I just used 8:30, 15-minute liquidity got swept. I went down to a 3-minute, 15-minute liquidity sweep right here. I see that we show some sort of reaction. I'm waiting for this swing low to get broken because I'm not just going to wait for a break of structure that's all the way up there and get faked out like these retail traders. And we go up to take this liquidity out. So whoever shorted there right now because of the 1-minute break of structure, they're out of the market because they just got stopped out right here. And then we go for another run down right here. And we don't break through it, but then we finally break through these two swing lows. That's enough for me. And we also go below with a wick of this. I'm perfectly fine with that. So then I wait for this fair value gap to get returned to, which we do right here, right? And then I drop down to 1 minute. This is that fair value gap, 3-minute fair value gap on the 1 minute. So this broke structure because these swing lows got broken through, right? This is the breaker structure. This is the 1 minute time frame. I'm looking for something to the left that's in this fair value gap. That's still within it because I'm trying to get my entry within the fair value gap. What do I see? There's an order block right here. Bearish order block because the move up before the move down, right? This is the move up before the big move down. And it has a bunch of fair value gaps in it. That's considered a valid order block. And I entered right here on the dot on this candle right here. I'm gonna move it down a little bit right to the mitigation block. That's where my limit was at. And my stop loss was this intermediate term high. Why is that an intermediate term high? I'll make a more in-depth video about that, but basically that's an intermediate term high because after this high, I'm sorry, not this high right here. After this high went down, we made a fair value gap within it, a bearish fair value gap because it showed a bearish reaction. That's why I'm not expecting price to go all the way back up there. And obviously, if you want to be more safer, you can put it right here above this high, but that's a little bit too much pips for me to risk, so I don't want to do that. So I just put it above the intermediate term high, and this played out very well. And my TP was this low right here, the 830 low that was made, because that's time-based liquidity. Market wants to reach for that time-based liquidity. And now, how did I find out what my draw on liquidity was? My draw on liquidity, I had it marked out on ES as well. ICT teaches this. You have to go from the candle's body. So I'm targeting this area, right? And the lowest body from that area is this, to the highest that their body is. The highest body is right here. And ICT does not teach this part, so listen up. This 2.3 area is what I found out on my own back testing. That's usually when price wants to. That's usually where price wants to reach up to, at least before it reverses a little bit. Obviously, it will go way lower like it did today, but that's the least, right? That's exactly that's if it's gonna go down, it's gonna reach for that. And what's to the left of it? We gotta find something left to this price right here. Remember this price, 17,706. Okay, so we're gonna just zoom out a little bit, and we're gonna see what was over here. So to the left of this, let's go. Oh, there's 9:30 liquidity. Friday 9:30 liquidity right here. 9:30 time-based liquidity. So whoever's long here is the market's gonna stop them out. There's no way market's not stopping them out. It's high time-based liquidity, and my confluences also saying that it's gonna go at least up to this point. So what's after this point? The liquidity right here. It's probably gonna chase for that liquidity, and that's exactly what I had in mind. It went to the liquidity, showed some reaction consolidation, and then boom, just went right down. So I could have really targeted this if I was a very professional, if I would be able to control my emotions like that, but I cannot do that. I cannot control my emotions like that. This much profit is enough for me. But look, just think about it. If I had just gone down to the draw on my liquidity, that's a 1 to 4.5. That's 712 pips. You know how much money that is? 712 times 5, that's almost like $4,000 you're making in one trade. That's insane trade that I just took today. But obviously I didn't make that much. I would have made 900-ish about because this is 224 pips. And all I did on ES is just use this as confluence. So as you can see, SMT was one confluence, 15-minute. Because ES and NQ moves in relation, but there's always these little differences. So if ES had swept this 15-minute high, equal highs before NQ had did, and it had shown me some sort of reaction, I would have entered on NQ based off of ES. That's exactly what I used ES for. And as you can see here, midnight open was actually lower than 8:30 opening, whereas NQ, midnight open was higher, right? It was way higher. This is midnight open, and 8:30 open is lower. So that's the little differences that will help you trade. But anyways, this is a kind of a longer video for the trading journal, but I'm telling you, this is packed with information. If you can learn from it, you will not regret it. Trust me. So if you have to even watch this a couple over times, do it. I'm telling you, I don't care about the views. I get like 10 views a video. I don't care. This is free knowledge that people are charging thousands for, and I'm teaching for free. So anyways, have a nice day, bro. Peace out.